Hello YouTube stackers, this is ST with Silver Stacking 101. This video is a continuation in the series we are doing on investing in silver for profit. What I mean by this is taking fiat dollars, going into silver, converting the silver back for a profit in fiat dollars. This is not something that we are prepping with or we are using as a guard against inflation. Now, in the past, I have discussed taking delivery of your silver. For prepping purposes, always take delivery of your silver. In the event of a collapse of the United States dollar, which will happen one day, chances are if you do not have your silver in your possession, nobody is going to send it to you. The same thing holds true with inflationary hedge silver. When runaway inflation hits, and it will hit eventually, if you are not holding your physical silver, you will be delayed in getting it if you get it at all. From an investment standpoint, however, we are not buying our investment long term. As a matter of fact, we want to shorten the process of the cycle from fiat dollars to silver back to fiat dollars as much as possible, because we have inflation working against us while we're doing this, and we are not kicking off any earnings by holding the silver. Hence the overly conservative value on the true value of silver. If we had went in last week, the paper loss today would have been 3% plus. 1 week. Now, that's not to say that won't reverse. And keep in mind the value of any asset ultimately is what someone is willing to pay you for it. Now, one good thing about silver is we have a large amount of objectivity in the price due to an auction-driven market. But we have two problems that arise when investing short-term in silver. Number one is liquidity. And number two, transaction cost. They both have the same solution. Please keep in mind that when we are investing in silver, it is not like a marriage. We are not spending a long time with this asset. It's not a one-night stand either. It's more like a friends with benefits. Hey, when the time is right, you got nothing better to do with your money, and the other end's silver's looking right. It's like y'all get together until something better comes along, then you may get back together. Friends with benefits. You know how that works. A little relationship example there. How about that? Anyway, the way we solve the liquidity problem and the transactional cost problem is using ETFs. Again, let me stress before everybody jumps down my throat, I am not saying buy paper silver for your prepping silver or your inflationary hedge. This is something we might be in no more than a year, year and a half tops, preferably much shorter. We want to eliminate the transaction cost as much as possible. that eats our returns. If we buy physical silver, we have to pay a premium, typically per piece we buy. Hopefully we get a buyer that will pay the premium back to us. We can't go back and sell it where we bought it because they make their living buying less than what they sell it for. Go figure. It's the American way. God bless America. So we have to find our own buyer. Now we can find our buyer on eBay, but that's a big pain in the ass. Or a bigger pain in the ass is trying to advertise it on Craigslist and going to meet somebody, hoping we don't get robbed and have to shoot the guy and then do a bunch of unnecessary paperwork. I hate paperwork. And it can become very messy depending on jurisdiction. Some places actually frown on that. Where I live, it's really neat. Somebody's trying to rob you. You on their ass. That's pretty cool. But you don't want to go through that if you don't have to. ETFs take care of that. I have an ETF trader I use. It's an online brokerage house I use. I also buy stocks through it, and they do window trades. That means I get my ETF trades for 99 cents a piece. If silver's right and I want to dump $500 into it, it's 99 cents. When I go to sell it, it's 99 cents. I can use it the dollar cost average if it's going down at 99 cents a pop. And this is about the third time I tried to shoot the video and the motorcycle goes by. I live out in the country, so I'm not going to reshoot the video over the motorcycle going by. But ETFs are wonderful items for investment purposes, where we're going to be in it, enjoy ride up in price and get out. We don't have to deal with physical silver. As a matter of fact, I don't want to deal with physical silver in that situation, no more than I want share certificates sent to me on company stock I buy. I don't need that. I don't need the hassle. I don't want to have to find a buyer for this silver. Now, my prepping silver, I buy physically, I keep. My inflationary hedge silver, same thing. But my investment silver, I'm buying a lot of it when the price is right. I'm holding it, and I don't want to have to find a buyer for it. And at 99 cents, I'll eliminate the premium that is charged at the silver store. Now, next week, we're going to conclude. We're going to take everything we've done. We're going to put it together. And we're going to walk through on how, excuse me, to factor in all these things we went over. The opportunity cost, cost of capital, capital gains, risk component, volatility, transaction cost. And we're going to put everything together, and how are we going to make money doing this? Comment if you haven't. Subscribe if you haven't. After we get done with this next video, next Saturday, on Saturday videos, we're going to start debunking pumper myths, because a lot of them's been brought up in arguments that make no sense when you look at it. So let's go through and see what we can do about debunking some pumper myths. Comment. God bless you. I'm ST. Thank you.